At first, we have the S&P TSX composite. It's up about 1% on the day, and that means on the week it is up 41 basis points. Although on the month it's down 1.1%, and 3 months it's a negative 0.6. Year to date it's up 14%, but on the 1 year mark it is slightly negative. Moving on to the S&P 500, it is up 1.2% on the day, meaning the week return is 1.4%, although on the month it is just about negative 2%. For 3 months, it's up 3%, and year to date, it's up 16.63%. But again, looking at that year mark, it is only up 2.33%. The Dow is up 1% on the day, and that makes the week return 92 basis points. For the month, it is down just about 4%. But on the 3 months, it's up about 2%. Year to date, it's up 12%, but again, looking at the year, it's only up 1.5%. The Nasdaq is up 1.35% on the day. That means a week return of 1.77%. It's the opposite for the month, with a negative 1.76%. The 3 month return is 3.9%, and year to date, it's up just over 20%. Although for the year mark again, it is up just 2.3%. The FTSE is up 1% on the day, and it's fallen 29 basis points on the week. The Nikkei is up 71 basis points on the day, and 0.9% on the week. In Huawei news, the sanctions on Huawei by the US won't take effect for another 90 days as US has extended the start date for the sanctions. This comes as a result of a lot of US companies being dependent on Huawei for business, and that these 90 days will allow them to get their affairs in order. Though while they still banned Huawei in about 90 days, they've also blacklisted more than 40 Huawei affiliates. After France imposed a 3% tax on global tech companies, Amazon, Google, and Facebook are trying to fight against this. They say that this is bad for business and that is moving away from a global economy that has similar tax rules. Amazon has already said that they plan on passing this 3% tax onto their French sellers and that they will just take all of it. As well, Facebook will have a significant burden to try and figure out how to separate their data and revenue to figure out the tax policy for France. The big concern here for the tech giants is that other countries will follow suit after France's lead, after this goes through, and that it'll have a significant effect on total business. An interesting response to the French taxes is that President Donald Trump has come out against the taxes and he's floated the idea of placing tariffs on French wine. Now, this could escalate into a trade war between France and the US, which should keep an eye out for. This is an interesting story. JP Morgan's Diamond, their CEO, is rejecting Investor-Centric model with many other CEOs. There's a total of 181 that have signed on to this. Some more notables is the CEO of Goldman Sachs, Morgan Stanley, as well as Jeff Bezos. So the investor-centric model basically means that a corporation's primary responsibility is to maximize shareholder wealth, and they are against this idea. And this is over concerns over income inequality, health costs, and higher education costs. So they want to include all stakeholders, so employees, customers, and society as a whole. It's kind of strange how much they focus on society as a whole, that the companies for some reason have to have a political interest and focus on society as a whole. There's a quote down here from Diamond. It says, "In the past, boards and advisors to boards advised company CEOs to keep their heads down and stay out of the line of fire. Now the opposite may be true. If companies and CEOs do not get involved in public policy issues, making progress on all these problems may be more difficult." Now, I don't know why it's a CEO's responsibility or even a giant corporation's responsibilities to push public policy issues. I don't know why they would be on my side or they'd want the small man to win. It just doesn't seem reasonable. It seems like they have ulterior motives because they talk about activist shareholders and the pressure they put on companies, as well as maximizing shareholder wealth. They say short-term in nature and just focus on quarterly results and the share price. which doesn't make much sense, and I don't see how this can address the issue on that. But in terms of active investors, I think that one of the reasons a lot of CEOs are going on board with this is they're annoyed with activist investors and that they're putting a lot of pressure on earnings and what the CEO should do. And if shareholders aren't the only ones that they have to please, then the CEO can gain more power and avoid what the activist investors say. In terms of income inequality, they say that the average ratio of CEO competition to median workers of an S&P 500 firm is 280 to 1. Now that is kind of high, but I mean it's what I would expect. A decent amount of that too is going to be stock compensation, stock plans. But you don't really see a lot of these CEOs asking for lower pay, taking lower pay. If they're so concerned about that, I'm not sure why they just don't take lower pay. It just seems like more of a publicity stunt than anything. Walt Disney has announced that they're releasing Disney Plus in Canada on November 12th. They say it will cost $9 per month or $90 per year. And this adds to the industry of online video watching in Canada with competitors like Crave TV, Netflix, and Amazon Prime. This puts a lot of pressure on cable companies as more consumers are moving to online and cutting their cable. A lot of the younger generation don't really like cable and they don't like the idea of appointment television.